Welcome back to Boss Economics World, folks, your one-stop shop for calling out economic clownery, government mismanagement, and the absolute dumpster fire of policies that keep tanking our wallets. I'm your host, the guy who's been screaming "I told you so" since the 2016 trade wars, and today, we're diving headfirst into the latest mess cooked up by the White House, central banks, and the global economic circus. Buckle up, because this one's gonna hurt, especially if you're still pretending tariffs are winning or central banks have a clue what they're doing. Spoiler alert, they don't. Alright, folks, let's get into it. The world economy is currently a runaway train, and the conductor, Donald Trump, is gleefully tossing dynamite onto the tracks while yelling, "Trust me, I'm a genius." From a pending global trade to throwing central banking into chaos, the man's got a knack for turning economic stability into a season finale of The Apprentice. And let's not forget the supporting cast, central bankers, who are now reduced to sitting on their hands, shrugging, and mumbling, we'll get back to you once the White House stops setting fires. Today, we're breaking down the latest economic disaster movie, starring tariffs, uncertainty, and a bunch of policymakers who are about as useful as a chocolate teapot. We'll go from the surface-level headlines to the deep, dark economic abyss behind them, and trust me, I've got the receipts, data, examples, and a healthy dose of sarcasm to prove just how bad this is. Let's roll. First up, let's talk about the elephant in the room, Trump's tariff obsession. This guy's been slapping tariffs on everyone, Mexico, Canada, China, the EU, like he's playing a global game of whack-a-mole. And now, he's teasing an even bigger bombshell, a worldwide program of reciprocal tariffs set to drop on April 2, 2025. He's calling it Liberation Day. Liberation from what, exactly? Economic sanity. Here's the deal, folks. Tariffs sound great if you're a politician trying to flex on the world stage, we're protecting American jobs. But in reality, they're a sledgehammer to the delicate machinery of global trade. The Organization for Economic Cooperation and Development, OECD, just downgraded its global growth outlook for 2025 and 2026, citing, you guessed it, higher trade barriers and policy uncertainty. According to their latest report, global GDP growth is now projected to limp along at just 3.1% in 2025, down from a pre-tariff forecast of 3.4%. That might not sound like much, but for context, every percentage point of global GDP is worth about $1 trillion in economic activity. So, yeah, Trump's tariff tantrum is shaving billions off the global economy. And let's not forget the inflation angle. Tariffs don't just slow growth, they jack up prices. When you slap a 25% tariff on Chinese goods, guess who pays for it? Not China, you, the American consumer. A 2024 study by the National Bureau of Economic Research found that Trump's 2018 to 2019 tariffs cost U.S. households an average of $800 per year in higher prices. Fast forward to 2025, and with Trump doubling down, economists at Allianz Trade estimate that his new tariff proposals could push U.S. inflation up by 1.5 percentage points. That's right, folks, your grocery bill, your car, your iPhone. All getting pricier, courtesy of America First policies. But hey, maybe Trump's right, and this is all part of some 4D chess strategy to rebalance global trade. Except, it's not. The U.S. trade deficit with China, which Trump swore tariffs would fix, has barely budged. In 2024, the U.S. trade deficit in goods with China was still a whopping $367 billion, according to the U.S. Census Bureau. Meanwhile, American exporters, think farmers, manufacturers, and small businesses, are getting crushed by retaliatory tariffs from other countries. Just ask the soybean farmers in Iowa, who saw exports to China plummet by 75% during the first Trump trade war. So, what's the takeaway here? Tariffs are a lose-lose. They hurt consumers, tank growth, and don't even achieve their stated goals. But hey, at least Trump gets to post on Truth Social, about how tough he is. Now, let's pivot to the folks who are supposed to be steering us out of this mess, central bankers. You know, the people we pay to obsess over spreadsheets, inflation forecasts, and interest rates so the rest of us can focus on paying our bills. Except, oops, they're not steering anymore. Thanks to Trump's chaos, central banks around the world have been demoted from economic maestros to hapless bystanders, wringing their hands and muttering, well, let's just wait and see. Take the Federal Reserve, for example. On March 19, 2025, Fed Chair Jerome Powell kept U.S. interest rates unchanged, citing, drumroll, please, uncertainty. Powell's basically saying, look, I'd love to do my job, but with Trump threatening to blow up global trade, I'm just gonna sit here and sip my coffee. And it's not just the Federal. The Bank of England, BOE, dropped its rate-cutting bias on March 20, 2025, despite the UK economy showing signs of weakness. Why? Because of international risks and uncertainty, a word that appeared 15 times in the BOE's latest meeting minutes, up from just 6 times 6 weeks earlier. Meanwhile, Sweden's Riksbank declared its easing cycle over, Japan's central bank is paralyzed, and the European Central Bank, ECB, is stuck in limbo, with traders split on whether they'll cut rates or hold steady at their April 2025 meeting. ECB President Christine Lagarde summed it up perfectly: the uncertainty is huge, and some of her colleagues are calling it phenomenal. Translation: we have no idea what's going on, and we're terrified. Here's the problem, folks. Central banks are supposed to be the grown-ups in the room, using monetary policy to stabilize the economy. When growth slows, they cut rates to encourage borrowing and investment. When inflation spikes, they raise rates to cool things down. But when you've got a president throwing tariff grenades and rewriting trade rules on a whim, central banks can't plan ahead. They're stuck in a fog of uncertainty, and that's bad news for all of us. Let's break this down with some data. The Peterson Institute for International Economics estimates that Trump's proposed 2025 tariffs could reduce global trade volumes by 10% within 2 years. That's a massive hit to economic activity, folks. Think factory closures, job losses, and weaker consumer spending. Normally, central banks would respond by cutting rates to stimulate growth. But here's the kicker: tariffs are also inflationary. The International Monetary Fund, IMF, projects that a full-blown US-China tariff war could push global inflation up by 0.8 percentage points in 2025. So, central banks are stuck between a rock and a hard place: cut rates and risk runaway inflation, or raise rates and choke off growth. And let's not forget the currency angle. Tariffs and uncertainty are driving investors to safe haven currencies like the Swiss franc, which is why the Swiss National Bank just cut rates on March 20, 2025, to take some pressure off its currency. Meanwhile, emerging markets like Indonesia and Taiwan are getting hammered as investors flee riskier assets. The MSCI Emerging Markets Index has dropped 8% since Trump's tariff threats ramped up in early 2025, wiping out billions in value. The bottom line: central banks are paralyzed, and it's all thanks to government mismanagement. Instead of setting the economic tempo, they're just reacting to whatever curveball Trump throws next. But wait, folks, it gets worse. Trump's not just wrecking trade, he's also shaking up international security pacts, like NATO, which is adding another layer of economic jeopardy. European nations, especially Germany, are now gearing up to borrow hundreds of billions of euros to rearm, as Trump pressures them to spend more on defense. On the surface, this sounds like a win for the US: hey, Europe's finally paying up. But dig deeper, and it's a disaster waiting to happen. Here's why. Massive defense spending means massive borrowing, and that means higher government debt. Germany, the supposed fiscal hawk of Europe, is already planning to issue 200 billion euros in new bonds over the next 5 years to fund its military buildup, according to Bloomberg. That's on top of its existing debt, which is already at 64% of GDP. Higher borrowing means higher interest rates, as bond markets demand more return to finance riskier debt. And higher interest rates mean tighter financial conditions, which choke off private investment and consumer spending. Oh, and let's not forget the inflationary angle, again. Defense spending is a classic men's-side stimulus. When governments pour billions into tanks, jets, and missiles, it creates jobs and boosts demand, but it also drives up prices, especially in an already supply-constrained economy. The Kiel Institute for the World Economy estimates that Europe's planned defense buildup could add 0.5 percentage points to Eurozone inflation by 2026. So, once again, central banks are stuck. Do they raise rates to fight inflation, even if it kills growth? Or do they let inflation spiral out of control? And here's the kicker, folks: all this chaos is happening against the backdrop of a global economy that's already on life support. The World Bank's latest Global Economic Prospects report warns that 2025 could see the slowest global growth in 3 decades, with downside risks mounting. From trade wars to defense spending to central bank paralysis, the hits just keep coming. And now, for the grand finale, let's talk about Trump's brilliant plan to fix all this. On March 19, 2025, he took to Truth Social to declare that the Fed should cut rates to offset the impact of his tariffs. Because, nothing screams economic genius like demanding lower interest rates in the middle of an inflationary tariff war. Here's the problem, folks. Cutting rates might give a short-term boost to growth, but it's like pouring gasoline on an inflation fire. With tariffs already driving up prices, lower rates would just make things worse, devaluing the dollar and making imports even more expensive. The Fed's own projections, updated on March 19, 2025, show that most officials see higher uncertainty around growth, inflation, and unemployment. Translation: they're not dumb enough to take Trump's advice. But here's the real issue: Trump's meddling is undermining the independence of the federal central banks are supposed to be insulated from political pressure so they can make decisions based on data, not tweets, or Truth Social posts. When politicians start bullying central banks, it erodes trust in the system, spooks markets, and makes it harder to manage the economy. Just look at Turkey, where President Erdogan's meddling in monetary policy has led to runaway inflation and a collapsing currency. Is that what we want for the US? Alright, folks, let's wrap this up. What we've got here is a textbook case of government mismanagement tanking the economy. Trump's tariff obsession is killing trade, jacking up prices, and paralyzing central banks. His pressure on NATO is forcing Europe into a debt-fueled defense binge, adding more fuel to the inflationary fire. And his solutions, like bullying the Fed to cut rates, are the economic equivalent of handing a toddler a flamethrower. The losers? You and me, folks. Higher prices, slower growth, and a global economy that's teetering on the edge of recession. The winners? Politicians who get to flex on the world stage while the rest of us pick up the tab. So, what's the fix? First, stop the tariff madness. Second, let central banks do their jobs without political interference. And third, invest in policies that actually help the economy, like infrastructure, education, and innovation, instead of wasting billions on trade wars and defense binges. But hey, don't hold your breath. As long as the clowns are running the circus, we're stuck with this mess. Until next time, keep your wallets close and your skepticism closer. This is Boss Economics World, signing off.